Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I want to talk about the current situation and the stock market crash. So this will be an update to try to understand how far can this stock market crash continue to go, what kind of prices can we reach, and is now a great time to buy or it's better to wait a little bit, then the stock market will crash even further. I will make a video just to share my personal opinion, can be wrong, can be right, I don't know. Anyway, the only thing I ask you is just to leave me a like, an early like, it's very important and I thank you for it. And subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so here is the Nasdaq. Now I'm just gonna explain you in just a second what all of that is for. But anyway, when we take a look at the market today, another bloody day. Really, stock market is crashing and is crashing without any mercy because especially in the tech sector, but also for example, Delta, we have today American Airlines, a little bit of downward for JP Morgan as well. The only things that are going well are oil stocks. This is ExxonMobil, which is a stock that I own. I made a video actually months and months ago about this one. Anyway, everything else is red. We have Amazon red, Pinterest red, Square, basically absolutely everything. JD, Tattoo Chef, Neo, look at Neo, how much Neo is crashing, it reached $33 per share. But anyway, this situation is like it is, and one of the main problem, what it is, this one. Here we go, the T-bill rate and the 5 years rate as well, as the market is facing is inflation, is afraid of inflation. And yesterday we had Jerome Powell, which made a speech, but basically the market was like, yeah, dude, whatever you want, I don't believe you. So he said, relax, there will not be inflation, or if you are gonna see inflation, will be just a one-time event because of the year-over-year measurement, right? So if you compare the inflation of March 2021 with March 2020, obviously it will be higher, and then the same going on until May, June, right? Because previous year the levels were very low. But he believes that there is nothing to be worried about. Anyway, it's funny to see how the market, and I have said you that in previous videos as well, has anticipated the Fed, right, with interest yields. And I've explained you quite clearly why this has a huge impact on tech stocks, on stocks that they don't make money right now. Because when you use the discount rate, basically, and you have earnings that are gonna be in 10 years time, right? Well, those earnings will be discounted way much if the market believes that inflation will come compared to value stocks that are making money today. So that's what we have to take about all of that. But another thing that I told you, it was kind of important to actually monitor this inflation stuff, inflation fear, is the oil price, crude oil future. This is the CL1 from the NYMEX, and we can see that we went above the 65 levels. I told you in previous videos how this level until the 65, 66 per barrel, it's very important. As you can see, we have been down here since November 2018. And when you see that kind of spike in just a short amount of time, is the sign that the economy is basically reopening for real. The demand of oil is increasing as crazy. Because even though we see all this EV stuff and blah, 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 but the reality is that in 2021, oil is extremely important for the economy. It's not that it is everything electric yet, right? We are not in 2040, we are in 2021. So that's a huge indicator, very important. And when you see that spiking up, we just lose the control of it. That's another sign that inflation in the short term can happen for real, a little bit. right? As I told you we have seen together the JP Morgan article that they were saying they were expecting pretty clearly a shift to a little bit more of inflation, at least until 2022, simply because the economy reopens, and during the pandemic, a lot of businesses they went bankrupt. So basically, the supply of goods is not the same as it was before. On the other side, you have the demand. A lot of people and also businesses that they've been at home or shut down for a long period of time. So you have this explosive effect on the reopening that can push stuff higher. Honestly, I have spoken with people that they had businesses by themselves, and they had told me that it's not easy to find a supply of things, right? For example, stuff that comes from China, and mainly for basically commodities and stuff. And this reflects in the price. And why is the market fearing inflation? Is because if you have these spikes in commodities, those things will be reflected sooner or later in the end product. That's the thing. Let's talk about, for example, airlines. What you have is that if a lot of airlines around the world went out of business because of the pandemic, then when you reopen everything, it means that compared with 2019, you have less flights available. And if the same amount of people wants to work, those tickets, they have to go up. At least for a short amount of time, but that's what the market is fearing right now. Then, in the long term, I agree, probably things will go back to normal, but the reality is that at the moment, that's what we are having. Now, how much can this last? That's basically the $1,000,000 question. I have drawn here a little bit of technical because, in my opinion, is the only way to actually understand a little bit what could happen, right? Is just in terms of probability. But here, in my opinion, this is the Nasdaq, and we have started. I don't know if you are familiar with cyclical analysis and all this kind of sort of boring stuff. Anyway, the market moves in cycles, right? You never see the market going up on a straight line or going down on a straight line all the times. You see, bang, bang, down, all this kind of going up and then going down. A period of power and a period of weakness, and that's it forever. Now, what in my opinion has happened here is that we started an yearly cycle, so a 1 year cycle from the bottom of the pandemic. And this cycle is formed by two cycles which last 6 months each around, right? Cyclical analysis is not a clock, is not mathematical. You just have an idea on how much the weakness can last over there. And basically that's the idea. You have the first cycle, which ends up here in basically September. And then you should have the second part of the cycle, which is a bullish one because we broke the previous highs. And now we are at the end of it. Now it is closing a cycle. We are in the weakness part, and that's why we are seeing this kind of blood over there. How much can it last? The cyclical analysis tells that this could last basically until the end of March, right? So we have this timeline, which now here it has 19th of March. That's just probability, right? So it's not a science, but it just to make you understand actually what could happen. It's probably the only tool that we have if you do it properly. Now, what we see here is that I've drawn you this square over there. Just let me delete this one. I drawn you this square over there. Why is this, in my opinion, an important part? The area from 12,400 to 12,100, which is basically where we are today. We bounced from it yesterday. It looks like that we are reaching the area. It's important because the first part, 12,400, was the top of the previous cycle, while this one, 12,100, if you just take the Fibonacci retracement from the previous low to basically the high, you have the 618 level of Fibonacci, which is very important. I cannot explain you just in a few seconds why, but the market really pays attention to it. And the extension, if you take the bottom of basically the previous cycle from the top, you have that the 618, the second one, is around $11,900. So you have, in terms of technicals, another important, very important area over there. Let me delete this one. Probably it's easier to see. That's it, right? We have the first square, that's the first target, and then you have 11, which is here exactly is 11,884 for the Nasdaq, which is a very important level. We see this sideways movement congestion over there. Now, can we reach these levels? Well, that's pretty likely. The first one, we have already touched it, and as I told you, we still have, in terms of cyclical analysis, in front of us periods of weaknesses. So it can be likely that the Nasdaq can actually impact the area over there, at least the bottom of the square. And then we have also the 200 moving average, which is coming near to that. So that can probably be a very strong level as a support area. Now, what is the problem is that the Nasdaq actually didn't drop much. This is no market crash. This is just a normal pullback. It should be 14% if we reach the lower part of it. Anyway, that's fair enough, right? It's not a crash. A crash is like 60%. What is the problem? Is that inside the Nasdaq you have quality stocks, which I have always told you about, for example, Apple, Google, and stuff. When we take a look at, for example, Apple, we see that, yeah, it didn't actually consider the market crash as much. I made the last video I did about Apple, I showed you this square over there, which actually I told you that's, in my opinion, a buy area of fair price for Apple. We see that the stock was around here. Obviously, I got comments like, ha ha ha, you will never get that price. Well, guess where it is today, basically, touching the first part of the buy area. I told you that Google was fairly priced. Indeed, Google actually didn't give a damn about the stock market crash. That's what high quality stocks do. JP Morgan as well. They didn't give a damn about the crash. Indeed, if interest yield goes higher, financials are getting stronger. So that's actually could be an edge in the market today. Facebook was already beaten down, didn't give a damn about the crash. The stock was already undervalued, and so actually not in Microsoft as well. Anyway, you have all this kind of quality stuff in the Nasdaq, and then you have all the rest. The rest which has been destroyed by the market during these days. What has been destroyed? Most of all, stocks that they don't make money today. In the previous video that I did about Pinterest, I told you that how to justify a price of 84, the stock was priced for perfection. If we just go back and see the video, or just come here and see, I told you how. If you just change a little bit to a more realistic view, you have that the fair price could be around 60 very easy. And guess where the stock is today? Okay, that's just an example, and we can see same stuff, even more incredible with BNGO. These are very high speculative stocks that when it was around 10, I told you, look, to basically justify 10, we have to assume stuff which are highly unlikely at the moment. We cannot know them. It's just pure speculation. And the stock has dropped a lot. If you go to see those comments, basically people are saying, ha ha ha, you're stupid. The stock is going to 14, 15, 50. Yeah, guess where the stock is today? Anyway, that's basically what is happening. You have Palantir, which is another company that I like. I bought a little bit. I have drawn you this square, green square, and I told you that the stock could actually go even lower than this. Just from basically the valuation. Where is it? Over there. This is what I told you. The stock realistically can hit 19, can go below 20, and that's where, in my opinion, it becomes a buy. When I told you about Square as well, I said, look, I am not comfortable to buy more at these prices. The stock is traded for perfection, and I haven't seen the kind of growth that I would like to see in their key business divisions. But anyway, it looks like that the market really didn't give a damn about fundamentals. But and in the long term, those are the only thing that, in my opinion, they matter, right? So if it's not today, it's gonna be tomorrow, but the market will be back there. You can't escape from that. Another stock is Tesla. I have been saying about Tesla the last video I made. Look, this is the buy area. Very likely that the stock will hit that buy area. If you go to see the comments below that video, you have the guy saying, wow, the fair price of Tesla is $4,000. Okay, but guess what? Guess what Tesla is today? And I'm be willing to buy around that price. It will be significant, but obviously 900, it was too much. Anyway, what can we learn about this? First of all, is that short term, we can have actually, for real, that this interest yield, if it doesn't stop, the next level is 1.68, very important. If it doesn't stop, the tech will continue to fall. That's inevitable. It's all about the market perception of the reopening and the inflation. In the long term, things will come back to normal. I agree with that, but in the short term, if the fears continue, well, stock prices will get slammed. Another thing that we can do, in my opinion, is, for example, I told you that I have been watching very closely Palantir. I like it. It's becoming cheaper, very interesting. All the stuff, for example, Tesla as well. I told you around the 500. So we have a lot of interesting stocks, but I think that overall, one important thing to learn from this is the role of YouTube financial channels, right? And I want to just give you my simple opinion on this. If you have a YouTube channel, probably you know that. But if you don't, just let me explain you in a minute. If you want to make views, you need to talk about what people want to hear. If you make a video about a hype stock by telling people, look, that is shit, it won't go anywhere, it's risky, don't buy it, you will get a lot of negative, basically thumbs down, negative comments, all this kind of stuff, because you're not saying what people want to hear. Because during the momentum hype, everyone looks like genius, but that's not the reality. Let's face it, right? You have all these kind of hype channels, which they thrived during the 2020 bull hype market. Now it comes the reality, guys, back to normal. And the thing is that all those guys, they run the hype, they made a lot of views, a lot of money. Those channels, they started together with me and they now have above 100,000 subscribers. I just have 12,000. Why? Because I've always tried to remain real with you, not tell bullshit. I'm not able to tell bullshit. The problem is that if you do that, it's not good for the YouTube world. You get views if you tell people bullshit, and that's the true reality. There are a lot of channels that they told a lot of bullshit and they made a lot of money by doing this. So that said, I know absolutely no quality on YouTube, but anyway, that's the world, right? And that if people watch those people, well, it's good for them. What can I say about it? And the funny thing is that they also sell courses, stock market courses. Those people, they have absolutely no fucking idea what they're talking about, but they sell courses. Yeah, because they are the stock genius, right? For example, what they were talking about, one very hype stock was Virgin Galactic. Let's see where it is today. Look at that. Around here, they were saying, go back. Just watch those videos. Virgin Galactic will hit 500 per share. Another interesting one. Very hype stocks. People made thousands and thousands of dollars by talking about that particular stock, which is very easily NEO. How many people NEO to 300 by 2021? Go back and see those videos. I made a video about telling you, look, Neo can go back because it's not Tesla, because it's extremely overvalued and people are pricing as a tech. It's not a tech company. And where is Neo today? So anyway, in that video, I basically got just probably 1,000 views compared to 100,000 views when you say Neo to 300, right? Anyway, that's the reality, and that's, in my opinion, something that we have to learn. YouTube doesn't work like the stock market do. Anyway, let's keep an eye on these levels, the Nasdaq, which it looks like that it's really going on inside the square that I drawn you. And if the market accelerates, it can be that the end of the cycle can become first than actually the cyclical analysis that say that we can have another 10 days basically of weakness. For example, today the market has had a huge acceleration, and we are coming to the end of this cycle, which means that probably we are coming to the end of this downtrend, okay, momentarily, because then what is going to happen is that once you hit a bottom, a cycle ends, you will have another cycle, right, with another power move up. And then we will have to see whether this next cycle will be another bullish one, so going above the previous highs, or it can be also a sideways cycle, which basically doesn't go above and it doesn't do anything at all, right? But that will come in the future. In terms of technicals, we have that this area where the Nasdaq is today, it's very likely that it will make a strong support, right? So if you are looking for stocks, Tesla near 500, Square cheap, Pinterest has a more useful valuation, very interesting about something of Palantir as well. These kind of companies now, they are obviously more fairly priced compared to where they were 1 month ago. So if you want to buy, probably now it's better than 1 month ago, right? So that's the end of the video, guys. I hope you find it interesting. Leave me a like and leave me a comment below. Tell me, what do you think about that? Will it continue? Is this the bottom or not? Subscribe to the channel, and as always, guys, have a wonderful day.